looking at the amount of coins that have moved and the selling slowing down, we have seen Bitcoin double within months in a similar setup to this. So as long as we can see the ETF flows continuing and the Treasury companies continue to acquire at about the same rate they have been, and we can see the supply is dwindling pretty quickly, I think we could see Bitcoin double from here in a few months. Bitcoin is competing against store of value assets, where you park your wealth. Right now, again, that's bonds, 300 trillion. That's equities. That's real estate, 350 trillion. That's gold. That's collectibles. That's fine art, things like that. We have about a quadrillion, 1,000 trillion is sitting in just those store of value assets. And that's where Bitcoin's competing. The question is, what percentage of that basket could it really capture? Could it get a quarter point, 1 point, 5 points? Uber and Airbnb both captured 10% of their markets in less than a decade. I think that's reasonable for Bitcoin. The question is, at 10% of that market, what is it worth? And so the question isn't like, is it expensive compared to its past? The question is it expensive to its future? I think it's going to be $1 million in 2030, so I would say it's cheap.
Mark Moss opens by highlighting a pivotal transformation in Bitcoin's market structure. This isn't just retail speculation anymore, it's the beginning of a strategic, long-horizon institutional shift. What makes this moment so significant is not just the size of the capital flowing in, but the intent behind it. Institutions aren't chasing daily price swings, they're positioning for the long game. And before that, be the one who says, I was here before 100K. I'm on a mission to hit 100K subscriber before 2025 ends. Help me get there. Subscribe now and drop your thoughts on the market in the comment. Let's win and grow together.
I think this is way bigger than retail. Right now, what we're seeing is institutional flow. A lot of the institutional flow is not really, they're not traders, right? They're not really so worried about the specific price. I think to your point about inflation running hot and that potentially holding the Fed back, I think inflation running hot also pushes Bitcoin's price up as well. And so I would say whether the Fed cuts or not, inflation's on the table. I would agree with what you said there. And I think that continues to push Bitcoin's price up. What I'm actually looking for, the indicator that I'm watching the most, is the global liquidity. Okay, so not just what the Fed's doing, but the global liquidity. You can look at global M2. You can look at, like, let's say, the 4 or 5 major central banks, or some of the best global liquidity indicators. I mentioned Michael Howell earlier. Real Vision makes a good one. The Bitcoin layer makes a really good one. But I'm looking at global liquidity. And what happens is, as that money supply is increasing, assets go up along with it. And what we typically see is about somewhere between an 8 to 12 week lag or a 3-month lag. So for example, in Q4 of last year, asset prices were making new all-time highs, but global liquidity was actually trending down. So then in Q1 of this year, asset prices went down, even though global liquidity was going back up again. And then in Q2 of this year, asset prices started going back up again. Currently, global liquidity is still trending higher. Right now, it's slowing down a little bit, but it's still sustaining a high level. That's what I'm watching as the main indicator to see sort of when this bull market starts running out of steam. Let's talk about the flows for a second. So the ETF flows, you're talking dollars. If we look in terms of Bitcoin units, right? Bitcoins, they've added about 100,000 net in the last 3 months from the March lows. So the last couple of months, right? Again, the Donald Trump slump, and now we sort of have this rebound. So about 100,000 during that time. Now we have all these Bitcoin, or these publicly traded companies that are adding Bitcoin to their treasuries, and they're now, the top ones are holding about 823,000 Bitcoin. Now, during that same time, since the ETFs launched to now, Bitcoin's gone from about 40,000 to about 110,000, or I think you said it was 106, 107,000 right now. And so we've seen the rise of the price going along with this pump, if you will. I think the question that maybe you're asking is, like, how much further can it go? What are we expecting from this cycle? And what we can see is that a lot of people think that we haven't gotten the price appreciation, even though, to the point that you're making, the ETFs are having these big flows and the corporations are buying massive amounts of Bitcoin, although it did go from 40 to 110. But what we're seeing, Bitcoin is very unique compared to other financial assets. One thing that's very unique about Bitcoin is we can see on-chain data, all right? So it makes it very transparent. And so what we can see is that we can see all the wallets that are holding Bitcoins that haven't moved in a certain time frame. So we look at all the Bitcoin that have not moved in the last 1 to 5 years. We call these HODL waves, people that are holding Bitcoin for long periods of time. And people that have been holding it between 1 and 5 years are now starting to take long-term profit. So over the last 3 months, we've seen about 240,000 Bitcoin be moved from long-term wallets into the market. 240. So it's been matching, the amount of selling has been matching the inflows from the ETFs and the Treasury companies. So that's sort of what's been keeping the price right here. But here's what sort of history tells us, that there's potentially a supply squeeze coming. Because what we can see, again, looking at on-chain data, is we can see the amount of selling coming from these wallets is diminishing pretty quickly right now. Based off of past instances, when we've looked through several cycles, looking at the amount of coins that have moved and the selling slowing down, we have seen Bitcoin double within months in a similar setup to this. So as long as we can see the ETF flows continuing and the Treasury companies continue to acquire at about the same rate they have been, and we can see the supply is dwindling pretty quickly, I think we could see Bitcoin double from here in a few months. And, a lot of times what happens is we start to think, is it crowded? Bitcoin's at $100,000. Sounds really expensive because it used to be 10 cents and $10 and $1,000. And it sounds really expensive. But we need to look at, instead of the rear view mirror, we need to look at the windshield. Where are we going here? And so when we look at the asset price, there's several ways that we can start to sort of understand where it's going. One of which is looking at what is it competing against. So let's say Airbnb competed against hotels and Uber competed against taxis. This is like a venture capital lens, if you will. And Bitcoin is competing against store of value assets, where you park your wealth. Right now, again, that's bonds, 300 trillion. That's equities. That's real estate, 350 trillion. That's gold. That's collectibles. That's fine art, things like that. We have about a quadrillion, 1,000 trillion is sitting in just those store of value assets. And that's where Bitcoin's competing. The question is, what percentage of that basket could it really capture? Could it get a quarter point, 1 point, 5 points? Uber and Airbnb both captured 10% of their markets in less than a decade. I think that's reasonable for Bitcoin. The question is, at 10% of that market, what is it worth? And so the question isn't like, is it expensive compared to its past? The question is it expensive to its future? I think it's going to be $1 million in 2030, so I would say it's cheap.
Moss highlights a stunning political shift. Bitcoin is no longer in the crosshairs, it's now being embraced from the highest levels. With Donald Trump publicly backing Bitcoin and major political candidates adopting pro-crypto platforms, the narrative has flipped. Even traditional banks are cautiously returning to the space. If U.S. political resistance is fading, one of the biggest risks to Bitcoin's growth is now off the table, clearing the path for institutional scale and sovereign adoption.
In some far off time frame, it threatens the system. But in the shorter term, and when I say shorter term, I mean in the next couple of decades, I think it actually helps the system continue for a lot longer, and for the reasons that you've talked about. The United States, with the reserve currency, suffers under something called Triffin's dilemma. And Triffin's dilemma states that the nation that has the reserve currency is always going to be forced to hollow out its industrial base so it can send dollars offshore. And so the world needs dollars. The US has to continue to print the dollars, and that continues to inflate the system or debase the currency. Now, what that ends up with is asset prices at all-time highs. Homes are unaffordable anymore, right? How do our kids afford homes these days? How do they afford buying into stocks, into companies that are now trading like Tesla, 150 times PE, right? And so these assets are now unaffordable for these next generations because of that monetary debasement. And so I think what could happen, I think we're already starting to see this, is Bitcoin, as I said, acting as this liquidity sponge. Mm-hmm. So because it is the best performing asset, it's absorbing more of this liquidity than any other asset is. And it's sucking the monetary premium out of real estate, out of companies, out of stocks, et cetera. So for example, I started my career in real estate. I used to own hundreds of rental properties. I've pretty much sold all my rental properties and moved it into Bitcoin. And I see stories on X every single day of people doing the same thing. And so that starts to bring the monetary premium down. And so what I think could happen is asset prices that we need, like houses, for example, like businesses, it could bring those down and hold them in a more reasonable range, allowing the next generation to actually own assets. And that way it allows the dollar to continue to inflate, continue to send dollars to the rest of the world as is needed, but without the massive inflation that we've been seeing. Instead, it's going to Bitcoin. I don't necessarily think that it undermines it either. And so, I think certainly we're starting to see sovereigns starting to allocate towards Bitcoin, but we're decades from where that really starts to become a bigger number. But, you talk about gold all the time. And we know that over the last couple of years, central banks have been basically net sellers of US Treasuries and net buyers of gold. They've been buying more gold over the last couple of years than decades before that previously, right? And so we know that central banks diversify into other things. If they happen to put 1, 2, 3, 4, 5% into Bitcoin, it doesn't really materially change the US Treasury market necessarily. It certainly would change Bitcoin. So most people know they don't store their wealth in dollars. We store our wealth in lots of other assets. So that's why we're buying other assets. So I don't think it undermines it at all. Like I said, I think if anything, it extends the dollar's runway. We went from having a serious headwind. Bitcoin's entire existence, and more recently, like the last 5 years, has been under massive scrutiny, and not just scrutiny, but a literal headwind. I mean, the Biden administration was openly antagonistic. Operation Choke Point 2.0. My fund, the Bitcoin Opportunity Fund, we have Bitcoin in the name, and some banks wouldn't even allow their customers to wire us funds because of that. All right. So this is the type of environment that Bitcoin has been in. In 2017, when Bitcoin ran from $1,000 to $20,000 in coordinated fashion in December of 2017, in a coordinated fashion, Facebook and Google banned all advertising. All the banks blocked transactions to exchanges. All credit cards shut off transactions simultaneously. So this is the environment that Bitcoin has grown in spite of the attacks of the government. Elizabeth Warren literally ran on a campaign called anti-crypto. Okay. So Bitcoin has done that in spite of that. But now the headwinds have moved in 180-degree difference to now tailwinds, right? Now we have Trump talking about, I built the Bitcoin industry, I buy Bitcoin, right? And so what does that do? So when you ask about risks, what happens in these 50-year cycles where we see these technological revolutions that we're in right now? There's 4 distinct phases. And phase 1 is the eruption phase. So the technology was just invented and we have these early adopters playing with it. And that's the sort of the environment we've been in. Phase 2 is where the technology has sort of been adopted and now the big money comes in, institutional money. And we're in this period of Bitcoin where sort of now the big money's coming, but most of the risk is gone. At least in the United States, the political risk is gone. And if it's gone in the US, it's gone in most of the other markets. So I don't see a big risk right now in front of us. Of course, there's a couple risks that we could talk about. So certainly in this Treasury company run up right now, the kind of the goal of these companies is to use leverage. And so, of course, some people will take it too far and some of those companies will collapse. Of course, that's going to happen. I just don't see a big risk overall, though.
That doesn't mean it's all smooth sailing. Moss acknowledges a growing risks tied to over-leveraged Bitcoin Treasury strategies, some echoing the mistakes of 2020 to when firms like Celsius and BlockFi collapsed under the weight of poor risk management. However, he sees these as contained hazards, localized blow-ups rather than systemic threats. In his view, short-term turbulence is inevitable, but it won't derail the macro thesis. With global liquidity cycles turning favorable and political headwinds shifting into tailwinds, Bitcoin's adoption curve remains firmly intact. Asterisk follow the signal, click next video to keep going.